Hello, Internet. My name is Ryan Ingram, and today we're going to talk about how to find and raise private money. So, by the end of this video, you will know how I feel about private money, the two types of categories I have them broken up into, and which one I think is best. So, going back through my YouTube videos, I have realized I've missed a lot of content during the years that I haven't been making videos. And one of the most common questions that I got is, hey, I've got this deal, but I'm really confused on where to get the money for it. And that is a pretty common and probably one of the first obstacles you're going to run into once you understand how to invest in real estate and how to, vet or analyze deals. So probably you found a good deal and you think it's a great idea. You're familiar with all the parts of it, and now you just need the funding. So let's talk about that. The way that I like to break up private money is in two different categories. You've got private lenders and then hard money lenders. Now, the private lenders, those are going to be people that you know, friends, family members. And I think that's the only associations you can have with people. Yep. Yeah, I would agree with that. So if you know the people who are going to be giving you the money, if you have an existing relationship with them and there's not any middleman between you, then I would like to call that private money from a private lender. It's between you and the person with the money. The other option is hard money lenders. Now, that's somebody who their entire business, they have, a company that specifically goes out and finds people that want to get, a higher than average rate of return, taking riskier investments, and they are pleased with the fact that their loans are going to be backed by real estate, either via a first or second position mortgage. So those people are the middlemen between the people with the money and you, the person who's looking for the money. So, in order to make that a real business, they have to charge points. And a point is a percentage that is upfront at the time the loan closes. So, for easy math, if you needed to borrow $100,000 from a hard money lender, then you're going to pay anywhere between 2 and 4 points, and maybe more, depending on the risk of your deal. So 2 points would be $2,000 at closing, and 4 points would be $4,000 at closing. And in addition, hard money lenders normally make a spread on that interest as well. So, you know, let's say the hard money lender might raise the money at 10%. He lends it out at anywhere between 12 and 15%, maybe higher. Again, once you leave like the institutional banking world, then private lending is really anything that two people, specifically two businesses, can sit down and agree on. I know I say businesses because certain usury laws don't necessarily apply when it's business to business. Usury comes in when it is a private lender to like an owner occupied entity. And this is strictly business, all for money raised for purchasing of investment properties. So it's going to be business to business. So let's just keep usury out of this conversation. So, right off the bat, you can see that not having a middleman is going to be cheaper for you. If you raise the money at 10%, that is what you're going to be giving the lender. There's not going to be anything due at closing, and there's not going to be any increase in percentages. So, what I do when I'm looking for private money is I put myself in situations and in rooms and networking events or communities where there's likely going to be somebody that has disposable capital or capital that they could be discretionary with and lend. That is how I would go about finding private lenders. And then once you're in that room, or when you're not. If you are really passionate about real estate and particularly this deal that you found that you need funding for, then you should consider it your job to tell every single person that you know that you are looking for funding for this deal. And you would be surprised at how many people you can find and how many lenders you can create. I've got at this point countless examples where just me engaging in conversations in everyday life, or when you're stuck next to somebody on a plane, and those people they keep in touch over the years, and at some point, if you continue to do what you do, they're going to want to get a 10% return or 12% return on somebody that they believe in. And for bonus points, it's backed by real estate. So there's a great book by Matt Faircloth called Raising Private Capital. That is one of the Bigger Pockets books. I think that Bigger Pockets published it. And I would read that, and I would go around and then personally make it your mission to raise some amount of money. It doesn't have to be enough for one deal, but just go out and prove it to yourself that it can be done. Now, if you have a deal that needs to close urgently before you have time for all of that, then I would say that hard money is probably the way to go, because you can find these guys by doing a quick Google search, going to your local networking events, and looking for people that have money that want to participate in deals. A lot of times I will see that if somebody first has a deal, they will need funding, and it's almost like a gut reaction to try and find a partner. And in most cases, if you could just find a hard money lender, you won't need a partner. I think if you look at having a partner as a cost of capital, then what you would realize is giving up 50% of your profits with a partner after you do the flip or the project, whatever it is going to be way more expensive than if you just bite the bullet, use a hard money lender, and pay the origination points up front. As you can imagine, I know several hard money lenders. So if you have a deal that you need funding for, shoot me an email. I'll put that in the description below, and I will do my best to help you find a hard money lender for your deal. Otherwise, I'm also growing my insurance agency. So if you know anybody in the state of Ohio that needs insurance, either home, auto, or on their rental properties, then give me a call. I've written a book about real estate investing insurance, and I'm a little bit biased, but I don't think anybody can do it better. So I'll also link my insurance agency's website in the description, and please fill out a quote form or encourage somebody else to. Thank you so much, and look forward to talking to you on the next video.